Hello and welcome to another episode of the SwingTrader Weekly Status Update. It's Justin Nielsen, your host, and joining me this week is Chris Gessel, our Chief Content Officer, my boss, my friend.
I'm glad you got that.
I know I had to put that in there. So I feel a little overwhelmed. You know, Mike is out today, but I'm overwhelmed by Gessel's because we of course have Dominic Gessel in the background. So it's Gessel's 2, Nielsen's 1. But hey, we got a lot to talk about this week. Since we met last, we had a power trend start. But we also had some missiles flying from Iran to Israel, and a PCE report and jobs report coming. PCE report last week, jobs report coming this week. A lot of Fed speakers, and we're going to break it all down for you today in terms of what happened on SwingTrader. But to start, why don't we start with the NASDAQ composite, and we will talk a little bit about the power trend that began just Thursday. Now, the NASDAQ composite has been the lagging index, but it did seem like it was picking up some speed. What do you think, Chris?
Yeah, I mean, it kicked in, although this is not the most powerful power trend, especially if we look at the S&P. It resumed its power trend after going sideways essentially for a week. So it's just not the most fruitful power trend, at least not right now.
Yeah, but I mean, sometimes it's hard to tell in the early going, right?
Mm-hmm.
You know, just because you have a power trend, just like a follow through day, it doesn't guarantee success, but it does kind of put you in the mindset to be a little bit more open for holding on to stocks,
Sure.
getting bigger gains out of them. So that's and just to remind folks, the things that we look for in terms of a power trend, we look for this 21-day moving average line, which is our green line. We look for that to be above the 50-day moving average line, trending above it for for at least 5 days. We also look for the index to hold above the 20-day moving average line for at least 10 days. And at least in terms of the NASDAQ, one of the elements that we needed this 50-day moving average line to get back into an uptrend. And so once this day dropped off from that 50-day average window, and we got back above 18,000, it seemed like that was something that was easier to do. But as Chris noted, the S&P 500 also went back to an uptrend, a power trend on Thursday. This had only gone to power trend under pressure when it spent a little bit of time underneath the 50-day moving average line. But as you can see, this never had the 21 cross below the 50-day moving average line, but we still needed to wait for all of those elements to be in place to turn this S&P 500 power trend back on from under pressure, and that meant we needed the 10 days above the 21-day moving average line. So we've got those elements, but let's take a look back at the NASDAQ composite, and Chris, we came right down to the 21-day moving average line today.
Yes, and is the 50-day still in an uptrend?
I think so. I think we've got a little bit of room there. So it closed at 17,435 today, and it was it's in a downtrend. So it was at 17,437.
Does that turn the power trend off?
It doesn't turn the power trend off because once you have the power trend on, the uptrend can dilly-dally around. It's not until you get either a distribution cluster or a break of the 50-day moving average line. But again, at this point, these rules for the power trend come from market school rules, and at this point we haven't gotten the NASDAQ composite to full exposure yet. So in a way, the only thing that the power trend is doing right now is kind of putting a floor to keep us, at least halfway invested. Again, using the market school rules, that's with an exposure level of 2. So that's what's happening there. For those of you that attended our Las Vegas Founders Club meeting, it was great to see a lot of you. First of all, it was really nice being out in public live instead of being in our offices, only seeing people over Zoom. So we really appreciate the folks that showed up there. But one of the things also that Mike shared was some of his regression channel line analysis. And we are kind of down at least on the NASDAQ, we kind of got down to that 0.75 standard deviation on the downside, which, again, the 21-day moving average line, that regression channel line, this is kind of where you would expect to get support. And if we do, I think that's an area where we can maybe go a little bit heavier, lean into it a little bit more, but we want to wait for that bounce to happen. We don't want to anticipate it, because if we go lower from here, we could be looking at a visit to the 50-day moving average line. What's your take, Chris?
I think it has a lot to do with what happens in the Middle East right now, and as well as the longshoremen's strike, and what that does. Although one of our editors shared a story that bulk items like coal and things like that are not affected by the strike, so it's more container ships.
Mm-hmm.
So
Yeah, that's a good point. We didn't mention that at the outset, but in addition to the news for the Middle East, again, Iran did launch missiles towards Israel today. I did see some videos, and it looked like some of them were getting shot down again, but I haven't seen recent ones. But yeah, the longshoremen on the East Coast, did strike. They're looking for some more pay, and there's a whole thing about that. Was it Harrison that wrote the article on that today,
right,
and yesterday, I believe?
Yes.
Yeah,
Harrison,
so some of the stocks, he was looking at included, FedEx, which had a up day yesterday, but down day today. What was the other one that he was looking at? Was it Eagle? I can't remember the one that it was. Anyway, some of the maybe Expeditors. I think maybe that was the one. So yeah, some other areas that might be gaining some ground. But yeah, this one was also down today about 2%. Looking at the kind of overall market, chips that looked like they were kind of getting a nice move back up the 50-day moving average line, making some progress. Those had a down day, and the SMH VanEck Semiconductor ETF is down below the 21-day moving average line. So we did pull back a little bit on our exposure in that area. Actually, we completely pulled back on it. I have to say I was encouraged yesterday, Chris, that we came down to this 18,000 level, tested it, and then bounced back. But unfortunately, that level didn't hold today, and tech certainly was the hardest hit. I believe when we look at the ETFs, I like to look at the sector ETFs, and on the sector spider ETFs, XLK was down 2.44%. So definitely the hardest hit. The only one, the next closest was XLRE, the real estate ETF, which was only down 0.6%. So definitely very, very, very tech centric. And you can kind of see that the SPY, if you look at that, it was down 0.90%, but RSP, the equal weighted S&P 500, was down 0.53%, so almost half of that. How have you been kind of gauging this breadth in the market? Because the tech seems to be dragging things down, and if you're going equal weight, at least on the S&P 500, that seems like you're not getting as hurt.
Yeah, the AB line for the New York Stock Exchange looks perfect. It's been trending higher. NASDAQ, not so much. That's not it's
GMIAA.
Yeah,
it did the wrong market indicators. Here we go.
So that's what you want to see in a in a market, in a power trend. That looks good. Now, if you go to GMIAB, not nearly as impressive. It's been
very sloppy. And it really has kind of maintained its downtrend here for the last year. So again, compared to the NYSE, which has, really started trending up, back here on the November 1st follow through day or shortly after that. So very, very different from what we saw before, where, both were kind of in downtrends, even though the indexes were going up so much. But that was a lot to do with the Magnificent Seven, the FANG stocks, what have you. FNGS is a good gauge of those, and you can see that for FNGS, the FANG stocks plus some others, there's 10 stocks in there that did cross below the 21-day moving average line as well. I also wanted to just kind of touch base with you, Chris, on the economic side. Of course, we had the 50 basis points cut that the Fed did not too long ago, and it seemed like, as much as we were always kind of holding our breath ahead of these economic reports, PCE came out, Friday, and I don't remember hearing anyone saying, "Oh, well, I'm waiting until that PCE comes out before I do anything." And same thing with the jobs report. It seems like other things have kind of taken the center stage here, and not so much the Fed.
Yeah, definitely. I think I think the bigger worry now is that the economy is plenty strong, and the Fed probably shouldn't lower rates. There's a camp saying that out there, and ultimately the big risk that we face is a repeat of the 1970s, where they would cut rates and then the economy would take off again, and so would inflation. And so it's going to be a balancing act. So we'll see how it goes.
Yeah. So yesterday, Powell was speaking. Gosh, I can't even remember what it was that he was speaking at. It was the National Association of Business Economics annual meeting, I think. So I was trying to think of the acronym. But he was speaking there, and it didn't seem like he was saying anything new.
Right.
But as we can see here, I'm showing the FedWatch tool. This is from CBOE. I'm sorry, CME. You can find this at cmegroup.com. Their FedWatch tool. And one of the things that was kind of noticeable was that last week, it seemed like there was over a 50% chance, probability that we were looking at a 50 basis point cut in November. And now that has shrunk to, yesterday it shrunk to like 33%, I think is what I saw at one point. Today it's at 37% for a 50 basis point cut. Noticeably, the chance of a 0% cut of staying the same is at zero, which again, it seems like the certainty is there for a cut. It's just a matter of how much.
Right. Yeah. Again, I think trying to break inflation without a recession is very tough. And so.
Since we're kind of chatting a little bit and we're on the slides, Dominic, if you could go ahead and go to the first slide, we'll just kind of go through a little bit of how our pie graph here has changed. And I'm going to go 3 back, because again, before the power trend started, we had, quite a bit of cash up at 17.7%. We had a lot in retail, a lot in ETFs. And then if we go to how we were last week, you can see that we basically went heavy on the ETF side, really kind of took the cash position away, and then we're pretty spread out between real estate and chips and internet software. So we did have quite a bit of tech as well as utility. And then for where we stand today, again, we were getting really hit on tech. Certainly we were trying to kind of not overdo it. because there was a lot of, there's still a chance that we get this bounce at the 21-day moving average line for the NASDAQ, but we were just having a lot of things hitting our stops. And so where we ended up was back with a larger cash position, 34.9%. As you can see on the chart, ETFs are at 23. And because of some of our ads today, we spread out a little bit out of tech into energy, aerospace, medical yesterday, and finance. So those were some of the areas that we went with. So that's where we stand. Do you think the broader outside tech is the way to go right now, Chris?
Yeah, although there are a fairly small number of companies that have made some really big moves, like VST, Vistra.
Mm-hmm.
And
okay, we'll go back to the charts real quick.
So the issue is a lot of those started moving on September 11th, and it was an ugly morning, and all of a sudden it changed. Plus the market was still under the 50-day. It was not looking really good at that point. And so a lot of things moved, and if you didn't jump in on those that day, there haven't been a lot that have shown those sorts of gains since then.
Yeah, and I do have a position in Vistra, but this is not a tech company. This
Right.
is utilities, right? Although we keep on saying that it's almost AI adjacent, because
definitely.
the fact is that a lot of these AI, the data centers and everything like that, they require so much power. There's been a lot of talk about how much power is going to be required by artificial intelligence if this technology really truly becomes the life-changing technology that everyone's expecting it to be. The power it's going to require is pretty phenomenal. And so that's why XLU, you normally don't think of this as being something that would be a leading industry, especially when you have a power trend starting. But here we are. This is the market we have. Utilities at highs, recent highs. If we go to the weekly chart, you can see that this has just been one of the areas of leadership, strangely enough. And again, especially
looking at that weekly chart, it typically does not move. It goes sideways usually.
Right. Yeah. And I mean, hey, look, one of the things I should mention is that is not included in this performance is that you do get a yield from this ETF, 2.72%. That's, better than you get from the S&P 500. So no slouch there. But what's the good of that yield if you're overall not outperforming the S&P 500? So it might be interesting to see what a total return would look like, but I don't think that it would again come close to the S&P 500. And yeah, as we often say, why invest in something that's more targeted if you can just get the S&P 500 and do better? So whether it's a single stock or a single sector or industry. I also wanted you to have a look, Chris, if you don't mind, at some of the defense. Now, of course, with what's going on in the Middle East, you would expect, typically, aerospace and defense does tend to do a little bit better when wars break out. I mean, we saw, what was this? Was it 2021 that the Russian and Ukraine started? We didn't end up seeing as much as we expected, but aerospace defense has been an area really since the follow-through day in November that has been an overall outperformer. This is RTX. I'm going to just real quickly show ITA A little bit flat here on the overall aerospace defense, but RTX, we did add that to SwingTrader today. Northrop Grumman, that's another big one in that space. I do have a position in NOC. There's LMT, which I think might arguably be the leader right now. That was kind of the first to break out and had a really big day today.
Also, Howmet.
Yeah, Howmet. That one was looking strong. Heiko was another one that got a strong bounce from the 21-day moving average line yesterday. Not as robust today, but what do you think is the way to play the aerospace defense? Again, we saw kind of a blip with the Ukraine-Russia that didn't really seem to take that well. Is this a short-term trade, or do you think this might be something you can get more of a gain from?
Well, some of these have been running a while, but I think today the best stock to go after was RTX. I mean, it had been trading very tightly. It had been on my own watch list for a while, and then it really started to move today. I guess I'm always a little nervous about buying stuff off of such obvious news events, because then the news changes and things can turn against you.
Right. A couple other things to cover. QLD. This was one that we did take off of SwingTrader today. And again, when it was at the lows, we were kind of faced with this decision. We had a gain on it. We were kind of coming off of the gains. This is double leveraged. Since SPY has been outperforming the Qs, we did take a little bit off of our SSO position, but this one just seems stronger. So it seemed like a better place for the money was to keep it in SSO and reduce that QLD and get out of this with a gain. So it did come off the lows a little bit, and
but not as much as SSO.
Yeah, not as much as SSO. And I mean, yesterday it spent quite a bit of time in the negative. It wasn't until the very end of the day. So again, maybe that was end of the quarter window dressing. But yes, we did take QLD off. And the idea is, if we do get a bounce here, we could easily restart this trade. If it looks like tech is coming back. So on the ETF,
it certainly, last week it looked like tech was coming back, because both Taiwan Semiconductor and NVIDIA, started moving. I have positions in both, and I, added to them and taken off hedges and everything. And today I was adding to my hedges.
Right. So just as a reminder for folks, one of the ways that instead of taking something off completely, you can do a hedging strategy. I think we do have a video of Chris going through his hedging strategy where he uses puts. And one of the benefits is, okay, you can hold on to the stock. You keep your position. A lot of times you can actually make money, even with a full hedge. You can make money because of the way the option moves. You start making more money as the put option goes your way, more money than you're losing on the stock. So that's definitely a strategy to look into. And as Jim Ropel has mentioned a number of times, when you start taking off your hedges, you can really ramp up your exposure pretty quickly just by taking off hedges. And then you kind of are left with stocks that you have cushion on. So that can be a boon for that. But yeah, as you mentioned, NVIDIA coming back down below its 21-day moving average line and to the 50-day moving average line. Now,
but it held the 50 days, so tomorrow will be important.
Yeah, so if we're going to get a bounce, again, this is where we kind of need to see it for some of these big tech names. And then also wanted to kind of take a look at XHB. This is one that we did hold. It closed down slightly, but well at the top of its range. There were looking at a few of the home builders. DR Horton, that closed up positive today. Toll Brothers was positive today, looking pretty good. Pulte Homes, that kind of cleared an area of resistance. So I have a little bit of a heavier weight in XHB. I don't know. Right now, I think I'd prefer some of these home builders, the individual stocks. But sometimes, again, the ETF can be the way to go for participating in a group move. Any other specific stocks that have kind of caught your eye there, Chris?
Well, there's all sorts of things that are setting up, but a lot of them just don't have the volume that we need on SwingTrader. I was talking about SPXC earlier.
Yeah, this one is too thin for SwingTrader. We usually have a minimum liquidity, and because this has only 265,000 shares a day that it trades on average, a little bit thin in that regard, but a good setup. I mean, you got kind of a reversal here at the 21-day moving average line. Today was pretty much inside that, so yeah, not bad looking.
And also the volume dried up as it was pulling back. So this is one, if you see it in the morning and can hold a nice move for at least 30 minutes, that might be one to jump on.
Yeah. And one of the things we were talking about is, I know that Chris, you like to, you really kind of get turned off by single digit sales growth.
Yes, I do.
Which we do have right now on some of our SwingTrader current trades, but those are also kind of more cyclical plays. But this does have double digit, 18% in the last quarter, 16% in the quarter before that, 9%. So you're at least seeing some acceleration, some strong acceleration in the sales growth and in the earnings growth from 7 to 34 and then 34 as well. So that's something that's pretty good. And whereas a lot of times you might think of machinery, general industrial as a real slow, pokey industry, this stock has had some really strong relative strength.
Yeah, well, again, because I think it's an AI related play. It makes cooling systems. So it gets really hot running, running all those servers, and you got to keep them cool.
Yeah, some other stocks that we've been talking about, Carrier, in the AC and heating products. This one had, quite a run. There were a number of stocks in here, Modine as well, and the AC and heating products. That's been running. And again, you think, well, gosh, air conditioners, HVAC systems, why would these matter right now? And of course, it is the AI adjacency that might be, putting these into play. That pretty much, I think, wraps up all the topics we had for this week. Any final thoughts from you, Chris?
Well, I'd like to see some of these external events maybe recede, because it really did look like the market was getting ready to go, that we basically had a nice move off the bottom and then holding fairly tight, and there were more and more setups presenting themselves, and then now we've got a strike and a war to deal with. And so let's now, there have been times where when there's been conflicts, the market just takes off. So
yeah,
I think that this might be a little different, but we'll see.
That remains to be seen. Yeah. Certainly, to your point, Persian Gulf, 1991, I think it was January of 1991, if folks want to go back to that, and take a look, or even with 2003, the invasion of Iraq, that was something that was, kind of started a nice bull market there, even though there was a lot of fear going on. To that point, what about energy? I know I said we were going to stop, but I did see. I'm looking at the YouTube comments. Some folks were kind of asking about oil as just being an area to look at. I'm going to go ahead and pull up USO real quick. This is the U.S. Oil Fund. this is still trading below its 200-day moving average line, but came right up to the 50-day today. Is this something where you think maybe we need to start paying attention?
Well, we can look at some of the individual stocks. I think you'll find better setups than what we're seeing here in USO. And I was looking at the futures this morning and kind of had the same response. It's like, oh, okay, well, it's still in a downtrend below the 50-day and the 200-day. So yeah, I wouldn't. For me, I'm not going to be trading oil this time, but I could see some of the E&P companies or other related companies could offer some entries.
Mm-hmm. So E&P companies, one of the things you can do is switch from XLE to a little bit more targeted with the XOP, which is the oil and gas explorers. So that's one area to go to. OIH, if you want to kind of target the field services. Again, these are still in downtrends overall, but as you mentioned, there are some individual stocks that are looking much better, especially I would say in the transport pipeline area that might be worth taking a look at. Well, that's going to wrap it up for us. Thank you very much, folks, for watching. Don't forget that if you haven't tried it out yet, investors.com/IBD Live is a place where you can kind of get more content on a daily basis. We start up at 10 minutes before the market open, and we go live through the first 90 minutes of the market, kind of walking folks through. Chris was on today, and David Ryan, former protege of William O'Neill and a 3-time U.S. investing champion, was on discussing some of the stocks on their radar. So it's definitely a good time. We put out a lot of educational content during that hour, as we do with a lot of the content that you see after the market close, including our stock market today videos. Tomorrow, I'll be doing the podcast live at 2 p.m. Pacific time. So you can always join us for that. Lots of stuff. And hey, don't forget, like and subscribe whenever you get a chance, because that does help us know kind of when you are digging our content, and it puts it on the radar of other people. So we really appreciate it if you could help us out in that way. Thanks a lot for watching. Thanks, Chris, for filling in, and we'll see you all next week.
All right.